Am I audible? Nilofer, am I audible?
Yes, Kaji, I can go.
Jazakallah. Rabbi shrah li sadri wa yassir li amri wahlul 'uqdatan min lisani yafqahu qawli. Muhammadun salli ala rasulil karim, amma ba'd. Assalamu alaikum wa rahmatullahi wa barakatuh to everyone present today. Myself, Nusrat Ansari, welcome you all once again to this insightful series on Sharia compliance investing organized by Professional Solidarity Forum. Today, we are pleased to present our third session in the series, Alhamdulillah. We are honored to have with us Brother Shoaib Zaman, who will be sharing the valuable insight on this important topic. Before we begin, let us start with a recitation of Holy Quran. As Allah subhanahu wa ta'ala mentioned in Quran, बस जब आप कुरान पढ़े तो अल्लाह की पनाह मांगे शैतान मरदूद से. In line with this, I would like to invite Brother Ubaid. He is a software engineer and PSF associate from Mira Road. Over to you, brother.
Assalamu alaikum. Myself Ubaid.
Wa alaikum assalam.
أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. ذلك الكتاب لا ريب فيه هدى للمتقين. يا أيها الذين آمنوا اتقوا الله حق تقاته ولا تموتن إلا وأنتم مسلمون. ومن يتق الله يجعل له مخرجا ويرزقه من حيث لا يحتسب ومن يتوكل على الله فهو حسبه إن الله بالغ أمره قد جعل الله لكل شيء قدرا. إن أكرمكم عند الله أتقاكم إن الله عليم خبير. صدق الله العظيم. Translation. Surah Baqarah, ayat number 2. This is the book about which there is no doubt, a guidance for those conscious of Allah. Surah Al Imran, ayah number 102. O you who have believed, fear Allah as He should be feared, and do not die except as Muslim in submission to Him. Surah At-Talaq, ayah number 2 and 3. And whoever fears Allah, He will make for him a way out and will provide for him from where he does not expect. And whoever relies upon Allah, then He is sufficient for him. Indeed, Allah will accomplish His purpose. Allah has already set for everything a decreed extent. Surah Al-Hujarat, ayat number 13. Indeed, the most noble of you in the sight of Allah is the most righteous of you. Indeed, Allah is knowing and acquainted. Thank you.
Jazakallah khairan kasira, brother. May the guidance of Quran continue to enlighten our path. Ameen. Moving on. Introduction to Professional Solidarity Forum. What is its purpose? What is its intention? So let us hear from Sister Nilofer Ansari, Senior SAP Consultant and an active member of PSF from Jogeshwari. Over to you, Sister.
Thank you, Baji. Assalamu alaikum wa rahmatullahi wa barakatuhu.
Walaikum assalam.
So, most of us already know what PSF is all about, but let's just quickly have a round of introduction for the new participants. Uh, we are a registered organization with a group of professionals from both IT and non-IT. And our primary objective is to provide a platform that can assist the professionals to enhance their skills and creativity for development and bring a positive change in society. So it was established in 2017 with a handful of professionals, and today we have 400 plus members with us. Our organization structure looks like this. We have city president, vice president, core team members, and associates. Uh, the city president and vice president lead the planning and budgeting, delegate execution of the task, and the give regular status reporting. The core team will conceptualize the activity and own the execution. Members actively participate in the events, contribute their time, skills, and donate. And they also participate in the promotion of all the events. Associates are the passive participants in the events and contribute their time, skills, and donation. Contribution from city president, vice president, and core team members is 500 a month. Uh, Members participate 300 a month, and associate can voluntarily contribute as in how they feel. So we focus on three broad areas: service to professionals, networking, and core social services. So under service to professionals, we aim to empower individuals by exposing them to emerging technologies. Uh, we arrange a 1 to 2 hour monthly session that focuses on technical topics. We do have short 2 to 3 month online program to help individuals become job ready. Under mentor mentee, we have a structured program where an experienced mentor will provide guidance and support to the mentee to overcome the challenges that he or she faces. And course tie-ups, we had it in the past with training institutes. So if anyone of you is interested, they can contact the admin and get more information on that. Under networking, we have community engagement, get-togethers, dinner meets, family connects. So we arrange sessions on psychological well-being, financial leadership, and current affairs. We have half-yearly get-togethers, dinner meets, and family connects. This involves, engaging with members, facilitating interaction, and creating opportunities for connection and collaboration. So here we come with the two flagship projects owned by PSF. It's Kafalat and Neki Basket. So our intention is that every child has, the right to education, and we aim to help needy students for providing them by providing them with education support. So as you can see, in academic year 2024-25, we have sponsored 272 students in Mumbai, Navi Mumbai and suburban areas with an amount of almost 27 lakhs. As can be seen in the slide, our progress is trending upward. It shows the positive impact of our initiative. How does this work? So it is a very, very transparent process. We do a very strict check of background of the candidate to get a surety if he really deserves to be helped. The donor can select a child from the website, choose the amount to donate, and the amount is directly handed over to the school. We keep a track of progress of the child, and all the information is shared with the donor as and when required. Moreover, we get a tax benefit of our donations as they are exempted under ATG of income tax. Neki basket is a Turkish concept of neki ki tokri. This helps to combat hunger and malnutrition in the society. So, what we firmly believe is that no one should be deprived of the basic meal. We carry out our distributions in Jogeshwari, East Ambujwadi, and Malad Maluni. So, total packets distributed since inception is 33,000 plus. We serve 10 meals per month, and there are approximately 100 packets per meal. 170 plus families are benefited from this program. The process remains the same as Kafalat. You can check our website or app, select the cause, and donate online. You get a receipt of the donation, and again, all the donations are exempted under 80G of income tax. You can note down the URL www.psfmumbai.org, educatechild.in, nekibasket.org. And for any information, you can contact the admin. The contact number is flashed on your screen. And this platform is also open for students in their final year. It will provide them with immense opportunity to network with experienced professionals and familiarize them with great ideas. Before I hand over to Nusrat ma'am, I appeal everyone on behalf of PSF to bring in more professionals, more people in our network so that we have more hands to contribute. See, we call ourselves professionals. Indeed, Allah Ta'ala has made us stand out in the crowd. For some of us, it wouldn't have been an easy journey. Many of us might not be from very well-to-do families. Few of us might not have their parents in the white collar occupation. But surely Allah Ta'ala has made it easy for us to break that chain. And this is not something we deserve, neither something that we should be proud of, but definitely it is something that we must be grateful of. Being Muslims, this must make us feel obligated to reciprocate kindness within our society. We must have that sense of ethical responsibility to benefit others. And this doesn't require a lot of efforts. A small donation, a helping hand, sharing your knowledge, lending someone a ear to listen, and guiding them could be of great help for someone in need. Your contributions, no matter how small, would definitely be fruitful in the long run, both in the world and hereafter. And may Allah Ta'ala accept these little acts of kindness from all of us, and may this become a sawab jariya for us. With this, I conclude and hand over to Mr. Uthman. Jazakallah khair.
Jazakallah khairan kasira, Sister Nilofer, for introducing PSF. As Allah subhanahu wa ta'ala remind us in Quran, and I did not create the jinn and mankind except to worship me. So with this intention, we, the PSF family, invite you all to join us to strengthen our mission of serving Allah's deen and supporting our community together. As rightly said, are reminded by Sister Nilofer, every small effort counts, and Allah does not let any good deeds go waste. So, with this, without any further delay, now I request Brother Shoaib Zaman, a certified financial planner, to take us to the core topic of today's session. Over to you, brother. Let me just check. There is some network issue from Shoaib brother. I'll just check with him. Give us a couple of minutes. There is some technical issue from brother Shoaib's side. Inshallah, he'll be joining in 2 to 3 minutes. So today, brother Shoaib will be covering the today's session. The topic that he'll be covering is understanding key investing strategies, fundamental, quantitative, technical, behavioral, event-driven, and thematic. India-based example he's going to take to see these strategies in action, learn essential accounting skill for stock picking and the interactive quizzes. And he's going to recommend some readings also for this particular topic. Also, there is a request that it has been observed that last two sessions that we had already had, the feedback was not filled. So I'll be sharing the feedback link in the chat box. So in the meantime, if possible, for those who are present in today's presentation, so I request them to kindly fill those feedback form. I'll be sharing the link in the chat box. We are extremely sorry for the inconvenient cost. I hope you all can see the screen. Uh, Over to you, brother.
Assalamu alaikum.
Walaikum assalam wa rahmatullahi wa barakatuh. Full screen, you can share it, brother.
Okay. رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقهوا قولي. So, sorry, my system wasn't working for some reason. It just stopped responding to me. So I had to restart and reconnect again. That's why it took time. So today we don't have a lot of time. Normally something like this, it takes about 200 hours of learning to actually know the subject, and a lifelong learning that never stops. But we'll try and work out as much as possible in the next 1.5 hours. ठीक है, so stock investing strategy. So today what I was actually thinking of doing initially was to make sure that we do some practical examples. But unfortunately, due to some SEBI rules and regulation, we cannot show you, we cannot discuss any live case studies directly. So instead, what I have done is I have actually put together today's agenda will be that I'll be discussing about six stock investing styles. And if time permits, then maybe some basic accounting and how to look at all of those things. Uh, One of the most important part, we will only be sticking to long only investing strategy. What is long only investing strategy? It's basically where you are buying shares and then you are holding on to it. Why? Why we are only going to cover this part? Because this is the only part which is unanimously, or you can say close to majority scholars agreeing that it is Sharia compliant. Whereas when it comes to shorting, like I had explained in the last session as well, there is no consensus per se. Um, there are many scholars, famous scholars, who do agree that you can do some amount of shorting, but purely for the purpose of hedging. As a Whereas absolute short selling is something that is only theoretically there are some people who are batting for it, but most of the scholars don't agree with it, which is why we'll also stick only to long only investing strategy. So whenever someone says long only investing, it basically means that they'll be buying shares and then they'll hold it till the end. There are four main types of investing style in it if we look at it. One is fundamental, the other is quantitative, then comes technical. The fourth one is event driven. Now, this is usually supported, or you can say many people what they practice, they think that they are outside of these four and they will categorize themselves as either behavioral or niche investing. So, we'll try and touch most of it, and I'll probably also share resources, and if and I'll also pass on the presentation so you can take it from the organizers on about this. So what is introduction to fundamental investing? So fundamental investing is actually very simple. It's basically what we are saying is, if for any business or any tangible product, okay, let's say today if you go and you decide to buy a mobile, you will do your own research. You'll try and figure out which is the best mobile, which is most cost effective, and which fulfills all your need. And then there'll be multiple criterias. Now, no two people will likely have the same set of criteria when it comes to choosing a mobile. Similarly, no two people will have same set of criteria when choosing a stock. But what people are always trying to understand is, or what any investor has to look out for, is that they realize, or they have clarity of what they are buying. So you are basically buying a business and not just some paper which you are going to buy today, sell tomorrow, and make money out of it. Do people do something like this to make money? The answer is yes. Are they successful? Sometimes they are successful, sometimes they are not successful. But there is a very different set of criteria that comes into play for investors who would want to approach it in that sense. But it cannot be done via fundamental investing. So in fundamental investing, you are basically going to go around, figure out a company's worth, and then invest in it. So what are the things that we are looking at, and how do we decide what's the real worth of the company? There are many different ways. These are some broad metrics that people look at. Okay. Whereas an expert will probably be looking at all of them and they'll be making some personal judgment. But roughly, if we talk about it, the simpler thing that everyone will definitely look at when it comes to fundamental investing is, how is the revenue coming? So let's say if we take an example, can someone suggest a company? Any company would do right now, or a sector. HUL, great. So let's say, uh, so Rafiq Bhai has said first HUL, so we'll go with HUL. So Hindustan Unilever. So what does Hindustan Unilever do? It's a fast moving consumer good base. What it means is, this company goes around and manufactures toothpaste, soap, and biscuit, and so on and so forth. So where is the revenue coming from? Revenue is coming from all the products that it is selling, be it eatables, non-eatables, so on and so forth. What is its profit growth? Wait, I will probably. Can you see the screen? Wait. Oops. Okay. I think it will be this one. So
Yes.
I have switched to browser. Is the browser available? Yeah, great. So let's talk about HUL. So if we look at HUL, what we will see is, every year it is making its sales, and we can see how its sales growth is taking place, and we can see how its expenses is moving around. Okay. And with this we will so we will be looking at various metrics. If we just go by uh, so revenue, profit, how much sales is done, how much profit is made, what is the margin level, how is the debt equity, what are cash flows like. Then there are different ratios like return on equity, return on capital employed. These are ratios to understand if the business is being run in a very conservative way, or if it's being run in a very practical way. So if we see, okay, let's start from here. So sales growth we can see, then expenses. also we can see how it's growing, and therefore we can look at how it's operating profit. So when you are doing fundamental research, this is exactly what anybody is trying to understand, how the business is actually growing in different parameters. And um, sometimes, okay, you can also look at these. So what would a return on equity be? A return on equity is, in very simple terms, it basically means whatever money you have invested, how much have you made of it, or how much, what was your net profit by investing. So let's say if you invested 100 rupees, in this case, uh, let's say we invested, तो ठीक है, complicated हो जाएगा, ऐसे ही रखते हैं. So whatever we have invested, let's say we have invested 100 rupees, then how much of net profit are we making on top of it? And what is net profit? Net profit is whatever revenue is whatever sales has been done. Minus that goes whatever expenses was done. So what is left is operating profit. After that, we pay out whatever interest we have to give. We adjust for everything that we buy. We will be paying it in one time, but in our accounting books, we will go around slowly removing, like over a certain period, we'll be using depreciation to remove the impact of that one time buy. And and with that, we'll get to see what was the profit before tax, and then we'll be paying some taxes, and then whatever is left after paying taxes is our net profit. So return on equity simply shows how much of profit did we make by whatever amount we have invested. So this is, you can say, it shows how efficiently the business is being run. Okay. So 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 typically, if we look at it, our sales growth is expected. So within the in the industry parlance, or you can say what everybody, uh, what most people will say when it comes to fundamental investing. Acha, with fundamental investing, now there is another nuance. With every industry, these numbers, the shortcuts, the shorthands will change, and which is why one also needs to look at how the industry is moving around. So if we use the same example of, uh, चला गया, Hindustan Unilever itself, then let's see. Where is it? So so its return on equity is around 20%. ITC is showing much more, is around 27%. Okay. Then there are these other companies which are also part of FMCG, and there you can see how much money one is making by investing in it. So this is more like this gives you a sense as to what is happening, what is how the company is performing with respect to the industry. Then other factors that will come into play is your moat. Moat will be your, what is the strength of the company. In very simple terms, if we have to look at it, it means what is the strength of the company. Is it that it's a very famous brand that everybody knows, and henceforth whenever it's like this, Asian Paints is not the best paint that is available in the market, but if anyone would ask which paint to use at their home, everyone, the near consensus response you will get is use Asian Paints, and that they are very good. And this is what it means to have a good brand. Or similarly, one can say When it comes to fast food, what's the most common thing that people will think of is probably KFC or McDonald's or one of those Chinese restaurants. Correct, Abdul Qadir bhai. It is a boycott brand pro-Israel. But in terms of example, you can always use it. You need not invest in it. So while you shouldn't be investing doesn't mean that you shouldn't be studying it. It's very similar to saying that we need not we need not uh, study the scriptures of other religion because we are not going to follow it. That doesn't happen. We should try and read what is said in other scriptures. We need not follow it. The same principle will stand over here. You can use it as a case study to understand something or some point, but need not invest in it. And this is not an investing tips session. So let me be very clear on it. If anyone is thinking that they will get any idea of where to invest, that will not happen. The only thing I intend to do is basically share with you on how you can go around generating ideas and how different ways of generating ideas is actually linked to the investment style that someone is following. So when it comes to your fundamental investing, one has to actually study financial statement. There is no way around it. The tools that you can use is probably you will have to read annual reports, conference call script, and look at peer comparison and sector analysis. The resources that you can use, one resource is screener.com, the where you can get for any company that you want. The other is Tijori Finance, where again you can search for any company's name and uh, look at their historical. Wait, you can look at how their financials are and how the asset size or the liability side is increasing, decreasing, the sources of fund that is taking place, how it is being used. So all of these things you can actually do through these two, three websites. For international stocks, if anybody would want to see, then their best resource I believe would be stockanalysis.com. It's very similar to your screener and theory that we use in India. What is the advantage of this style? It's very logical. Anyone who has some interest in accounting will find it very easy. Uh, there are lots of successful people who have been using it because before you buy into any particular stock, you will be doing enough study about it. The limitation or the biggest problem is that it needs a lot of patience. There are many cases where a stock has not moved for 5 years or 7 years, and then suddenly in probably 6 months' time or 1 year's time, the stock has moved up by uh, 200% or 100%. And this often happens when people are doing your fundamental investing. So a lot of fundamental investors, their biggest problem is that, or the biggest challenge that they face is that they have to sit and wait for a very long time. Who has used it on a very on in common and famous people whom you might have heard about? So one is Buffett, and the quote that that in one line explains how he is actually looking at it is buy wonderful businesses at fair prices. Then Peter Lynch is another famous fund manager. He has said that know what you own and why you own it. And that kind of also sets the tone as to how he was also using fundamental investing or fundamental research. But the style of investment was very different for Warren Buffett and for Peter Lynch. So there are many different styles, or you can say houses within fundamental investing. Think of it Okay, actually, let it be. The third person whose name everyone may have heard was Rakesh Jhunjhunwala. He was also using a lot of fundamental investing, and he always believed that one should invest in a growth at reasonable value, and that is how one can make a lot of money. Most of the fund managers, mutual fund managers globally, in India and globally, they all use the fundamental investing. The second way of investing is basically quantitative investing. So how this is done, there are no narratives. Everybody is using hardcore data. And then there is algorithms that are used. So many people who are into computer software, you may have come across something like this where someone is basically uh, mining through lots of company data and then coming out and explaining and then deciding which stock to invest in. So the primary goal over here is that one has to remove emotion, and they should not have a lot of bias in how you are investing. Like in fundamental investing, what happens is that everybody develops some level of bias, and that is why quantitative quantitative investing is all about looking only at data and model and process. So the easiest way of understanding is that it's like building you know building a building a standardized process of how you should go around cooking, so that if everyone who is cooking follows the same process, then the likelihood of a very very different taste is next to negligible. These are built using different kind of rules, like many people they use quantitative ideas sometimes to actually derive one stock or few stocks and then back test it into rules and then invest on it. One of the best example is your index funds. Especially you may have come across the term called smart beta index. So all smart beta index follows the same principle. You they basically there'll be a set of criteria, be it value or growth or quality or a combination of these, and then they will do some level of ranking either on a quarterly basis or 6 monthly basis or annual basis, and then based on that they will probably choose out of 500 stocks or 300 stocks, they'll choose about 20 stocks or 30 stocks or 50 stock portfolio, and then this is done on a regular basis. Types of quant strategies, there are a couple of them. Some of the most common ones or famous ones are value quant, quality. Then there are multi-factor models. One easy way of looking for like if you want to see some quantitative based so you can go to the niftyindices.com, and within that if you go to strategy, you will find different types of strategy, and you can actually read up on most of them. It's very easy to see. So which one to use? Let's say if we use this one, 500 quality. So if you just look at the fact sheet itself, it will mention how it is choosing stocks. So out of the 500 Nifty stocks, it chooses 50 companies with the highest quality bias, and this quality score is basically chosen based on these criterias: your return on equity, financial leverage, that is debt to equity ratio, and earnings per growth variability, as to how by what level the EPS growth has been going up and down. So that's what it's looking at for the last 5 years. And stocks are weights on a combination of stocks quality score and its free float market capitalization. Free float market capitalization, like I had already explained in the previous session, it basically shows how much of stocks are available for anyone to invest in. So this is your quant strategy. Another quant strategy would be your go. So the Sharia ETF will also technically be a quant strategy as it is as it is where it go as it will fall under the under thematic indices. And you can see what type of companies are being what sector is being uh, that qualify in this segment. Okay, and how these how they so they have got three indices. It's designed by a third party. Okay, they haven't mentioned over here. But okay. Anyways, the point being ke this is another way in which you can actually find some stocks based on your strategy or idea. Okay. So this is your quantitative strategy. All quantitative strategies are in very simple terms. They are looking at your different ratios and different financial statement numbers, and based on those numbers, it is creating a logic. It is actually following a logic tree based on which stocks are selected, and that's how people are investing. The most common way, if you would want to, let's say, if you have a thesis or a strategy, if you would want to test, one of the one of the good ways of investing would be through a website called Trendline. It allows you to actually backtest your screening methodology or a screening strategy with ease. So you can just create a screen, probably uh, build your own query. Right. Why is it not working over here? Uh, debt to equity ratio 7.2 should be ethical alcohol banking finance. So if we give a simpler command, something on these lines, and then probably we can just save the screener and we can run low to debt to equity. And if we just run it, we can actually see. And then they also have an option of doing a backtesting. So you can actually do a backtesting and run it in different types of stocks, and you can even decide if you want to run your strategy every week, every month, and probably even if you would want to sort it by any specific thing. Um, and limited to the number of stocks. Okay, ठीक है. Okay, 9. So it basically will run a statistical uh, analysis for you and basically do a back testing of whatever you are setting in. We'll come back to this one a little later since it's running. So this is one. Then there is uh, another common website called Charting. I haven't done enough testing on this, but I know a lot of people who are using it, and they say that it's pretty good and you can do back testing on a number of it. So what's the biggest pros and cons? The advantage is that it's very objective, very consistent, and there is no human emotion attached. It's not that just because you have done a lot of study about a particular company and henceforth you are either biased for it or against it, or just because you have held it on to it, you are not. You find it very difficult to sell it, and this is where your quantitative investing comes in very handy because instead of going by instead of being getting hampered by any kind of bias, one can be very consistent and number number based. The biggest problem is it's garbage in, garbage out. If your logic itself is wrong, then you will never be happy with it, and whatever you are saying, you will not be able to replicate it. The second biggest problem is overfitting, because you are always back testing it and cross checking it. There are a lot of other types of bias that you end up developing. For example, because we know that uh, let's say 2020 the markets fell by 30% in just the month of March, and then it started increasing again and it went up by about 100% or 200 odd percent, 150 odd percent. Now, because we are already aware about this particular information, majority of the people, when they are back testing, the underlying problem is that they will very easily say कि हाँ, I'll just stay invested during that entire period and that's how I will make money. The answer is it's not so easy. In the last 6 months, when the market was falling in the first half or the first quarter of 2025, calendar year 2025, there were many people who were panicking and who were asking as to what to do next, just because their portfolio had corrected by 10-15%. Which is why it's very easy to see in hindsight, or looking at the back history and say this is how one has to do, but it's nearly impossible, or it becomes very challenging for most people to execute it. So execution is often the biggest challenge with your with this kind of a strategy. The third bigger problem is that it will underperform during an unexpected event. So let's say today, so when when COVID happened, because COVID was an unexpected event, that is one of the reasons why suddenly markets had crashed by 30%. And everybody was thinking that it's the end of the world, whereas nothing like that had happened. But nothing as such happened which would show the end of the world. And these during these unpredictable times, because you are underperforming, which is why one starts thinking, okay, array, this is not the best of criteria, or this is not the best style of investing. And this is where the problem is. And the fourth problem is that people require some level of technical skills, or a large team supporting them. Uh, Not so much is required. Like, even if we look at it today, for example, in our case itself, while we can do oh yeah, see this, just because we were running a very simple back testing, but look at this back testing result. हाँ, ये रहा. तो January of 2025, the markets fell by 32%. October, okay, we missed the October March 20th portion, but that's okay. The larger point over here was, if you see this back testing, while it's very easy for many people, for many of us, it would be very easy to say, कि हाँ ठीक है, we can easily invest, it's a decent strategy. But do we think we can actually stay invested after losing out 30% in 1 month, and in the next month you would lose another 10%? That's like close to 45% being shaved off your portfolio. And that's when most people will actually lose their they will lose their composure, and they may even stop investing or following it. And this is the kind of problem that happens uh, with this with this strategy. Eh, okay, if we look at how you would have done against Nifty 500, okay, so now you can see in less than 5 years your active returns was much higher. But that's where the problem is, or that's where the challenge is. The second problem that we were talking about, the second problem, that you needed tech skills or team support. For example, if we just look at this, the only criteria we were able to choose was debt to equity ratio. We weren't able to actually narrow down to the different metrics that will be utilized when doing Sharia compliant or building a Sharia compliant portfolio. That we were not able to fulfill. And that's the second problem. That if you really want to do something which wherein you have got multiple parameters, there is a high likelihood that it will not be easy to implement. In the Indian context, if we look at it, it's growing popular with do-it-yourself investors and small AIF. This is also used in nearly all the smart beta mutual funds. They use quantitative screens. And then you may also have heard about small case. So there are lots of people who are using these kind of strategies, and they're selling it on through small case, where they are saying that we'll be executing a particular whatever, their personal or they will be using their strategy which they haven't shared with everyone else, and that's how they'll be making money, and they'll show you something. Very famous quant investors. So globally, if you look at it, there are three famous quant investors. One was Joel Greenblatt. He used magic formula. If you ever search for magic formula stock investing, you will find his name. Then Jim Simmons was another guy who was very famous. He started the company called Renaissance Technologies. It was a very famous hedge fund, to the extent that they used to only hire PhDs in physics and maths to actually manage their investments. And currently, one of the very famous investor come researcher is Cliff Asness. He writes a blog. He writes papers on AQR. That's the name of his company. In India, there is a new mutual fund company that has been launched. It has just got its license. I think their fund has also been launched. It's called Capital Mind. They are very much into quantitative investing. And earlier, Edelweiss Mutual Fund was one AMC which I can think of, which used to have a quantitative bent. Nowadays, if you look at it, nearly uh, every large mutual fund has a dedicated team of maybe one people, two people, or three people who will only be looking into quant strategies and quant investing. If anyone is interested in figuring out which are the good books to read on and follow quantitative strategy, then perhaps The Man Who Solved the Market or Quantitative Value by Tobias Carlyle, What Works on Wall Street by James Shogney, and Beat the Market by Greenblatt. These are four books that one can uh, read. Then the third way of investing would be your technical analysis. Now, over here, nobody focuses. So, in newspaper, you will also come across, or many times you will come across on social media where people will be saying, "Okay, I have invested in the stock market. I did not do any hard work with fundamental investing, but did a lot of pattern reading or chart reading." So that's your technical analysis. Most of the people who are stating that they are following, day trading and they're making money, or they are doing weekly trading and they are making money, they are all following technical analysis 99% of the time. Here, the focus is never on what is happening, but uh, uh, what is happening in the company is never the focus. The only focus is what is happening with the price movement or with the volumes. So volumes, what is volumes? Volumes basically shows where, let's say, if 100 people are there and who are purchasing um a particular stocks, and each one of them is buying, let's say, 10 stocks each on an average. So that basically means 1,000 stocks will get traded, right? And that is volume. So volume basically shows how many people are interested to buy and how many people are buying, are doing or completing the transaction of buying and selling. So their idea is that a, a high volume is necessary to showcase that there is some interest in the market. If there is high volume and the market is going up, then then it's a buyer's market. Means everybody wants to buy and people are willing to pay slightly higher amount of money or a premium price to buy that particular stock. And when the reverse is happening is when your stock prices are following. Their core philosophy is that history always repeats itself, so price pattern reflects investor psychology, and the idea is to benefit from the investor psychology. What it involves is basically reading your charts and indicators and volume and resistance to figure out what's the best time to invest and how to invest. There are different types of chart like line bar, candlestick, then there is trend. The most common website that we, or I can say most people I know they use is, okay, now my mouse has stopped working, is tradingview.in or tradingview.com. Sorry, I think it's tradingview.com. So if we keep using the same example, so this is called a candle bar. This line, all that a candle bar shows is at what price the, so a red bar shows that what price the stock had opened and at what price it had closed. Uh, a green bar shows that the open price was lower and the closing price was higher, and the red bar shows that the closing price, the opening price was higher and the closing price was lower. And the small stick that you see, this thin line, it shows the high. So while it opened over here, closed on this line, the day high or the highest point in that time frame was at this level. The same way, the same has to be expected from this thin line when it shows the lowest point in the day. So while the stock opened at whatever at this level, 11,2316, throughout the day at some point it was also trading at 2215, and finally it actually closed at 2323, and maybe sometime during the day it actually went up as well. So this is a candle chart, and the way, and there are many different ways of reading these, reading it. Like okay, let's see, moving averages. So one of the common ones that are used, let's say, is your moving average, moving average crossover. Let it go. Okay, I had to log in. Okay, I don't recall the. Anyways, we will. You can let be. So there are many different ways of. There are many different tools that one can use to understand the technical indicators. Trendline is another place where you can actually find uh, decent tools. For example, let's say if we take, so they have a section called technicals. If you just go into technicals, you can see what is happening. So the moving averages wise, it is completely bullish. Your oscillator average wise also it is bullish, except for one metric is showing that it's on a average part, and you can see it on different uh, and the different ways in which people figure out what is the support and resistance. So all of these things are available, and this is what makes it easy. Okay, we don't have a lot of time, so I'll try and push as fast as possible. So there are charts, patterns, indicators. You can use all of them. A combination. People make money through all of it. Uh, these are some of the uh, suggested books. So three famous books on it is Encyclopedia of Chart Patterns, Japanese Candlestick Charting Technique, and Technical Analysis of the Financial Markets by John Murphy. Uh, yeah, and these are the three websites where you can actually go and use. You can get a lot of information, or you can actually use. These are the three tools that people can use. Now comes the fourth type of investing, which is your event-driven investing. So it's basically based on corporate action or some macro event, and it's very popular among hedge funds. Even I find it very interesting as a strategy. In fact, I think if I look at it from a single stock making a lot of money, I think every time I have managed to do it, it has happened because of something that has come from a event-driven investing. So a simple way of understanding event-driven is it's like betting on the outcome of a courtroom case where all the facts are available, all arguments are available on record, and you have read through it. Is this the last session in the series, or will there be more upcoming? No, Abdullah bhai, this is the last session, which is why I'm trying to cramp up as much information as I can and do whatever I can do within it. Uh, so 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 you have all the information, you have all the everything that one would want to know about a company. It's there in the public domain. The bigger problem is how to interpret it and how to prepare for it. So some of the very famous investors, global investors, one is Joel Greenblatt again. He has actually written a book on these kind of investments. Then there is a gentleman by the name of David Einhorn. He's an activist investing, and Bill Ackman. He is also very famous for using event-driven investing strategy. In India, most often among mutual funds, there is a segment called Special Situations Fund. Okay, or value fund and contra fund. These are the three types of funds which will often be using special situations in their portfolio. Uh, how do we go around figuring out uh, what is the where to find the data or information? There is no simple way of doing it. One has to just keep reading news, keep looking at all the information, and probably you will figure out some special situations. Three examples that I would like to highlight when it comes to special situation. One was delisting of Vedanta. Vedanta Limited had at one point decided that it's going to delist, and because the moment it decided that it's going to delist, and it's a very profitable company, it's a company which is into commodity space, a lot of people went ahead and bought the stock, that if even it becomes unlisted, we would still want to retain the shares, and nobody was willing to sell its shares to the promoters, and which actually led to the failing of uh, getting the company delisted. And this is one way in which anyone who would have seen this or had the moment the announcement was made, and anyone who would have had some idea, they may have decided, "Can't ठीक है, let's buy it and let's just wait for some time and then sell it," because selling it in the market would have fetched them much more money just by holding it for a few months. Then there was a classic opportunity when there was a HDFC and HDFC Bank merger, because one stock was trading at the premium of the other, and the moment the merger would take place, both the stock prices would be available at the same level. So that was this was an arbitrage opportunity, and this was also a special situation. The third, and something that everyone would have remembered, is when the when when that entire Maggie episode had happened, where government had banned Maggie for probably, I think, 1 month or 2 months, and there was a lot of hue and cry where people went ahead and said, "Okay, uh, the Nestle has been mixing arsenic and so on and so forth, and some element was there in the magic masala which people shouldn't have been eating, and it was there, and which is why they had shut it down, the FSSAI." But that's when the stock price, I think, fell by some 40% odd, or 30%. And it was a fantastic moment. Anyone who would have thought about it and would have come to the conclusion that let me just keep buying Maggie, because my worst case scenario would be that Maggie as a product may not work, but Nestle has many other products, and or it may come out with some other product, and then it may end up making money. And that's why one should be investing into it. And that's one way they would have made money, because after probably, I think, 1 year or 2 years, when the entire saga became normal. Just a sec, let's see. Nestle, Maggie, and the stock price during Maggie ban. So yeah. So before before the ban, it was trading at this price, and it fell to around 5,000 at one point, between 5 and 6,000. So if anyone who would have invested at that level, they would have easily made around 20% or so on this stock in about, uh, ouch, in about probably 6 months, I think, or 8 months time. So this is your chart and graph that you can see. So the moment the news came, it fell off, and then after some period, it kind of recovered. And this is where your your special situations become very challenging or very interesting as well. Because what would have happened if that thesis wouldn't have played? Then whoever would have invested, maybe they would have seen their money get lost. And this happens all the time in the with special situations. So there are many different types of special situations. There is merger acquisition, so one company buying another company, and there is some discrepancy, and both of them are listed, and there is some discrepancy between these two prices, and that's where you can actually benefit. Then demergers or a spin-off is another way where one can go around, figure out, for example, ITC, for a very long time, its stock price did not go anywhere. It was just giving dividend, and it was a good dividend giving stock, but it was not, the stock price was fairly stagnant or range bound. So many people who decided to invest in it, they figured that the the way to make money would have been, okay, once you buy the stock and you keep getting dividends, and if there is a split, which is what, or a demerger that would take place, or a spin-off, which effectively means it has multiple businesses, so every business will be will be put up as a separate business. Instead of having one brand, it will probably have different brands. So ITC cigarettes will be different, ITC FMCG will be different, and ITC hotel will be different, and there are the ITC IT will be different. So the idea was, whenever this business will be broken into four or five or six businesses, at that point of time there will be unlocking of value that will take place, and that is how the investor is going to make money. So this was the larger idea behind investing. Okay. Then there are special dividends, bonus, rights issue. That's another way where sometimes people, but there nowadays nobody makes a lot of money from this. Regulatory or legal events is another way in which these are again special events. Let's say there is some company which let's say there is a pharma company which has filed for an FDA for against some drug. The moment they get the FDA approval, the share price of that stock is going to go up. The question is, can someone actually go through all the filings, see at what stage is a drug, and then make an educated guess? It's a lot of work, but it's not an impossible work. There are a couple of different pharma companies where people have made money by doing this level of research and just figuring out कि ठीक है, if a stage has is if a medicine is already into clinical trial, then naturally then most likely it will get its FDA approval, most likely, especially if it's a well-renowned company which has a long history, has already launched many different products, is often most successful in doing it, and they specialize in probably one or two types of medicine. So in these scenarios, your likelihood probability increases, and that's how you can make money. Then bankruptcy and restructuring is another way of investing in it. So any company which is about to go into bankruptcy, nowadays it's not so easy to make money, but during Great Depression, 1930s, uh, Warren Buffett's teacher Benjamin Graham made a lot of money from employing this particular strategy, which is bankruptcy and restructuring. And it was very common in US. I don't recall anything great in India as a strategy. Then nowadays, what is most common is index inclusion. So remember this, these indices. So there is an information on press release that often comes at the end of every quarter or probably 1 month before the quarter ends, as to which indices will see what kind of inclusion and exclusion. So whenever, especially the most famous ones like Nifty 50 or Nifty 500 or uh, any index which is very famous, if there is an exclusion or inclusion in it, one can benefit from it, because whatever is going to be excluded effectively means that the ETF or the index is going to sell it, which means that they'll be selling higher selling pressure on it. Whereas anything that is about to be included will have a lot of buying pressure on it. So the prices is about to go up. The point is, can you just buy and sit for 1 month and benefit from the benefit by selling it when every index and ETF is trying to rebalance its portfolio. This is a very common strategy today, that everybody is using. Then there are macro events or policy shocks. For example, let's say, while we don't invest into uh, in banking stocks, but for those investors who are doing it, they will always be looking at what the RBI is saying. So if RBI comes up with any kind of policy rate cut or policy increase, rate increase, it will directly have impacts on financial services and your banking stocks. And that's how people try and invest or decide to sell or buy those stocks. So policy shocks or macro events is another way of doing it. One of the things that I have found very interesting is basically following at debt reduction. Any company, because what does Sharia compliance says? That your company should be ethical and should be doing halal business and all of that thing. But the key criteria after all of that is that it should have low debt. Now, from everyone who's also not following uh, low, Sharia compliance, they may also favor this kind of a strategy. Why? Because it shows the company has very low leverage. If the company can survive, matlab it is making enough money that it can pay off all the salary to all its employees, then there is a high likelihood that the company will live through or survive through maybe the poor patches, which could be 6 months or 6 years or whatever that patch period is, if it doesn't have debt. So going through hard times, your survival chances increases for every company which is not heavily leveraged. And this is something that many investors are always looking for. So if one just goes around following, a strategy of looking into companies or looking for companies where debt gets reduced because the company has paid off, the promoters have paid off, or they sold something and they paid it off, then there is a high likelihood that you can generate good returns if your price point is right. There are many other factors that one has to look at. This debt reduction is more like a starting point, and then you'll have to do the full fundamental analysis and arrive at some sort of a conclusion of whether to invest in it or not. Ah. What are the most important things that one has to look at whenever they are doing special situations, okay, or event driven investing? What is the offer price, at what price you are going to buy, what price you intend to sell, how long will it take for your thesis to play out? Will it take 6 months, will it take 6 years? You have to make some sort of a guess so that you are aware कि ठीक है, it did not work out and you have maybe lost money, or you it did not work out the way you were thinking. And then what is the probability of an event actually taking place? It's not necessary that just because you would want the stock to behave in a certain way, it's going to behave, right? So there is always some probability that things will occur in a very different way. And this is why you need to think through as to what are your chances of making money in that particular event or in that particular situation, and then what's the risk reward. So what if whatever your thesis is, it flops, it does not work through? Then in that scenario, uh, if we just take that Maggie example itself, if that did not work out, then probably the share price would have fallen even below 5,000, gone to 4,000 or 3,000, who knows, God knows, right? And this is what one has to take into account. If you lose out your money because the event did not take place as you had thought or uh, decided upon, then how will you behave? Does it uh, while it is a capital loss, but does it hamper your investments totally, or is it only impacting a little bit? So these are some of the things that one has to see. Then what is the volume and the liquidity, how easy it is going to enter and exit. Is there any particular tools or platform that one can go through? The answer is no. There are many different, like you will have to look at all over the place. My experience is that there is no standard way of looking at it. You should always build some sort of a checklist for your execution, because if you are able to do it, chances are that you will make more money into special situations than in other style if it suits you. uh Three books that you should read if you are looking at this particular style: that you can be a stock market genius, Art of Value Investing, and Investment Banking Explained. Okay, these are three books that one should. Then there is, like I said, so while these are your four primary forms of investing, then there are two other things that people are looking at. One is behavioral investing, wherein you are always looking at psychology and trying to see that uh, like markets basically move by fear and greed and not spreadsheets. Uh, but in behavioral investing, what happens is when the market is falling, then you will naturally feel like let me take out some money from the market, and this becomes a problem. And similarly, when just because the stock price is going up without the fundamentals improving or changing, a lot of people, they believe that it is still a good time to invest, and which is a problem because that's not how your money is made. Rather, it's one of the ways of losing out your money, hard earned money, right? So common investor bias. So there are two types of bias that often comes around. One is overconfidence, thinking that you know everything, you are right, you can make all the second is your anchoring bias. I had bought this stock at 500 rupees, so at least I should let it come back to 500 and then I'll sell it. Whereas that is not the right logic. If you go to any financial advisor, they will probably explain to you that if you have lost money, you might as well just accept it and move to a better idea that you can find, instead of just waiting for the price to come back. Because what if the price doesn't come back, or what if it takes 3 years, and in between you allow so many good ideas to go by. Then there are emotional biases like loss aversion. Any suggestions for Sharia screener for early investors? I will come to your question once I finish off uh, these two parameters. This is the second last, and then there will be one more. So, loss aversion, fear of losing, that you have lost money and henceforth you would just want to remain invested till you recover. So that's one. And then FOMO, you may have come across this term, fear of missing out. So Everybody is following the same herding decision, and this is another problem that may come across. The best way of managing behavior and event based investing for both of them is that you should use some sort of a checklist to decide on buy, sell, and stick. Pros and cons, it's very similar. If you are self-aware, then it's a great investment strategy. It helps reduce your mistakes, and even if you have made some mistake, most likely you will not feel as bad. And it's a great way of investing if you just uh, add a layer of fundamental or quantitative or technical investments into it. The biggest problem, it's very hard to it's very easy to think that you will not get swayed because everybody else is, but chances of that is not very high, because when your best friend or when your office colleagues or when someone in your family is able to make a very high return and your portfolio is not doing so well, we tend to think maybe there is something wrong, and then we end up making the same mistake that everybody else is doing. And this requires a very high level of discipline and behavioral understanding about themselves. When it comes to suggested books, Thinking Fast and Slow is a must read, followed by Value Investing and Behavioral Finance. It is by Parag Parekh, the same guy who founded your Parag Parekh mutual fund. Okay. Then your third is Misbehaving by Richard Thaler. That's also a very good book, and it must be read. In Indian context, uh, let's give you three examples. One is panic selling that came across in 2020 COVID crash, where Nifty 50, it actually fell some 35%. Over here, I've written 40%. Okay, this is classic loss aversion, and many people, they basically got out at the wrong time. Then frenzy buying for IPOs like Paytm, which is still loss making if I remember correct, or Zomato or Nykaa, where the pricing was insane. Zomato was also not as much profitable. It became profitable much later, and which basically this frenzying showed your herding behavior. So the ideal situation would have been to not invest in those IPOs and then invest in it much later, and probably investors would have made better money. Uh, Common problem, holding your losers and selling winners is a common challenge that everybody faces. And yeah, key takeaway. So niche investing is another way in which people can actually make money. What is niche investing? You don't invest in all the places. You only make your investment in a certain sector or in a certain segment. So let's say maybe some of you are into IT, some of you are into maybe you know HR ops or operations of some sort, or in some chemical industry. So about your respective industry, perhaps you will have some sort of an insight, right? You may be working in the best company, but you know which is the second best company. You may be working in the second best company, you know which is the best company. So you have some insight into the industry which uh, the other party will never have. And this is what a niche investing is. A niche investing is basically you are only investing in certain segment of the market where you have an edge, and your edge is kind of absolute. So deciding on investing on those side is much easier. Um, let's say if you are working for a company which is listed company, it's often better to not invest in it, because then there are two problems. The first is that there's an insider regulation act which basically states that you need to declare. You may have even signed up with your company, and in your agreement it would have said that you cannot buy your own shares. So that's one legal problem. The second problem is that let's say your understanding of your company was not very good, or you made an error in understanding about your company. And what would have happened then? Then then it's natural that if things don't work out in the right way, you may uh, you may not have the job, and you may also end up losing the money with your stocks. So it's more like a double whammy, which is why it's often recommended that the best thing to do is that you should do a combination of investments. So how to use all of this information in your portfolio? Ideally, that's the right question to ask. So, okay, as part of disclaimer, the best thing to do would be to consult your financial advisor and figure out what will work for you. The other answer will be, what you can do is perhaps you can invest a portion into mutual funds, perhaps you can buy some real estate property, and then invest some bit into stocks which you understand. Depending upon what sort of personality do you have, what works for you much in a much better way, be it technical investing, momentum investing, your fundamental investing, or and then based on these two things, you add up your third criteria, which is your um, yeah, or the third way of investing, which is your niche investing or special situations. So you can do any of those things depending upon what interests you. Whatever is of your interest, you use that method and you build a small stock portfolio. Now, as okay, Redmi ID had asked, any suggestions for Sharia screening? So for Sharia screening, like I had said in the previous session, there are a couple of ways of investing in Sharia investing. I will. So one method that you can use is uh, one thing you can do is, you can, let's say there are two or three mutual funds which are Sharia compliant, right? Tata Ethical. So let's say if it's Tata Ethical Fund. So you can probably search for its portfolio because their monthly portfolio is available, and from there, that becomes your um, that becomes your universe. Whatever 30, 50 stocks that are available in the portfolio is where you can also download this information from their own website, or you can see it on one of these companies, on one of these websites, where you can just see their complete portfolio, and then from there you can start your research. So this is one way of figuring out कि ठीक है, uh, because 70% of their portfolio will be Sharia compliant, so 30% will still not be Sharia compliant. You will have to figure out, or put in some effort to understand that you have not chosen a company which is out of that 30%, or let's say 20%. So, but other than that, you can look into all of these. So this is one way of searching for one idea. The other, in a similar fashion, you can also go to your these Sharia indices, and you can look into their fact sheet. You will only find 10 ideas or 10 names at max in here. So the top 10 names that are available, that's the only choice you will have, and you can decide if you would want to look into. So this is uh the third place you can look at is Zamzam Capital. I think Zamzam Capital. Just a second. So Zamzam Capital. So they have a Sharia board, and they upload their entire Sharia compliant stocks as per their, yeah. So you can just go to the halal list, and from here you can see, sorry. So they make this list available for free for everyone. So from here you can see the stocks and decide on your own. Besides this, you can also, if you want, you can use one of the, there are lots of these companies which are offering your Sharia compliant investing. So like Islamically, uh, Islamically. So it will cost you some amount of money. They have a complete Sharia board and everything, and so you can look into from here, or you can go to screener and uh, okay, what was my, I will perhaps share my, okay. So I have created a number of free screens that anyone can use. I've also shared it on the chat, and you can take it up from here. The challenge over here is that this will just take care of the quantitative aspect and not the qualitative aspect. So for qualitative aspect, you will have to understand certain things. Like for some of them, I have already given the hint, like remove hotels, defense related, alcohol, companies that support such businesses, and which you can easily do by looking at industry. So if you just go to industry, check all, and then you go around and remove anything that has to do with hotels, diversified, finance, beverages. So remove these companies, aerospace, defense. Okay, diversified metal you can keep, diversified general, don't remove it. So this will take care of your second factor. The third thing is companies which are supporting the genocide. There is no clear answer. You will always have to study your company. So when you start, whenever once you get this kind of a list, you need to study about the company. You need to understand where they are getting their revenue from, where they are spending their what sort of expenses they are having, how much are they giving away. As long as you keep doing these things, you will be able to identify all of those companies as well. And these are some of the simpler ways in which for anyone who wants a Sharia screening, they can do it. But these are just the primary stuff, and then they'll have to do the secondary, which is basically look at the ethical concern, the fundamental, the technical aspect, and then decide whether they would want to invest, not invest, so on and so forth. And we were okay. I think we managed to just close this part by. So, okay. I guess that's it from my end. If anyone has a question, probably we can take one or two questions before we end it. We are already late by 6 minutes, but okay. Any questions? Okay, most of the people have already left.
Any questions, anyone?
Any Sharia algo software? Which investing would be best for a layman? Fundamental. This is totally dependent upon your personality. There is no science to it. There is no particular method of looking at it. You will have to experiment, or you'll get yourself a coach who can be your registered research analyst, or someone who teaches this in colleges, or maybe or you will have to just read up and experiment with each one till you figure out which one suits you the best. What else should we check apart from EMA, RSI, MACD bullish? So again, Hafiz bhai, this is totally up to you. Okay, I don't even use all of these. I probably look at only RSI and EMA, and mostly I'm doing your fundamental investing or special situations. Those, that's what I am looking at. But you can use any of these methods to make money. So there are people have made money using everything. Effectively, you will have to do some level of research, or you will have to find yourself a mentor. But the only thing with the mentor is, when you are choosing a mentor, be prepared. It may happen that your temperament and the mentor's temperament is very different, and they may not be able to teach you as much, because it just, the two people, they just don't gel. And there's nothing wrong with it. Matlab, it's understandable. It can happen all the time. So
Any other questions? So I guess there is no question. Huh.
can we get help for halal investing? If you want, you can get in touch with me, and then we will see how I can help you out. Where to contact me? Okay, wait. I will just. So this is my WhatsApp number, and this is the official email ID. You can mail, or you can connect with me on WhatsApp. If you have to call me, please, I request you to first make an appointment, because if I'm busy, I'll probably just I'll not be able to pick up. Sometimes I'm just too tied up. LinkedIn, you can search for Shoaib Zaman on LinkedIn. Wait, I will also. Okay. So yeah, so this is me.
Any other questions? Any other questions? Anyone?
No, that's it. I think
Yeah,
it's
okay.
done.
Alhamdulillah. So we have come to the conclusion of this informative session series, the 3 sessions that we have on Sharia compliance investment. On behalf of PSF, I sincerely thanks to the speaker, Brother Shoaib Zaman, for sharing such a valuable insights and very informative sessions and practical examples that he has taken to explain us how the two can be merged, and we have to take the decision on financial dealings. We pray that Allah subhanahu wa ta'ala grant us all the ability to apply this knowledge in our financial dealings with sincerity and integrity, inshallah. I also extend my heartfelt thanks to all the active members that were involved in its organization, and lastly to all our participants for their active engagement and presence. May Allah subhanahu wa ta'ala reward each one of us abundantly. I would like to conclude today's session by sharing a couplet. बरकत का दरिया है हलाल की तरफ, बरकत का दरिया है हलाल की तरफ, हराम का सफर सिर्फ जलीलो ख्वार की तरफ। वाखिरुद्दावाना अनिल हम्दुलिल्लाहि रब्बिल आलमीन। जजाकल्ला ब्रदर शोएब, काफी अच्छा सेशन रहा। जजाकल्ला वंस अगेन।